Hello and welcome to the Friday wrap up brought to you by David Gockstein. I am your host, Landy, and today is August 7th, 2026. And this is a special edition. We have a special guest sitting back in the green room here. Tony is with us, and Tony, you're gonna have to correct my butchering of your last name, but I believe it's Severino. But we'll have him correct that when he comes on here in just a moment. But we're gonna get rolling with following up where I left off on the Wednesday check-in, and it's gonna be a whole lot of wow. Nothing really has happened for Bitcoin here. We are still stuck in a very tight range. We are still in a compression for Bitcoin here on the daily. The biggest thing here is looking at the weekly. For many of you, you already know and you're going to be hearing a lot more about this here in a little bit. But um, sitting below the basis band, but hanging on to the lower first standard deviation of the Bollinger Band set here around that 62 and a half to 62.8 is kind of the name of the game for Bitcoin. It does give Bitcoin the opportunity to try for a potential lower high to higher low, because we did have that locked in coming into this week with last week's closure. And of course, in order to see a higher low set, we need to see a close above last week's high. And that's going to come in right at that 65,700 area. Now, where would I be looking after that? For now, it'd be right back to the swings around that area just above in the 67 to $68,000 area, and potentially working its way back up to 68 to 70. If we did start to see any kind of closures that do set a higher low, great. We can in past 68 to 70, we can start looking to the mid to low $70,000 area. I'm not going to bore you all with that kind of stuff. You already well know this. If you've been watching the Monday and Wednesday videos, then of course, any of the Friday live streams. Now, on the other side of that, if we do drop 62 and a half, the wicks are fair game, yes, but from a weekly standpoint on a higher term time frame, the real target is going to be the lows and potentially lower. So 58 to 60 is kind of the name of the game, and potentially down into the mid 50s, 54 to 56 by the lower second standard deviation of the Bollinger Band set. Now, I've laid out the criteria many times for what it is that I'm looking for Bitcoin here in this particular range. We have something very important, and it's very simple, right? We moved from higher high to lower low. Now we have a technically swing. We had a swing lower low, swing lower high to closing lower high. But this is really one move, because there was no low set until we had the actual spike low come in at 57,750 for me in my book and the way that I do analysis. And therefore, we only got the low closed coming into the week prior to last week's or the 2 weeks ago, I guess, at this point, and then confirmed the lower high trend reversal setup. So it's a lot of words to say Bitcoin's stuck in a range and realistically below 62 and a half. Pay attention for the daily Bollinger Band set. That's right where the lower second standard deviation is. Lower third is down there in the 61 and a half range. And again, it can swing outside to 61. It's all about closes below 62 and a half that lose the lows, and especially any closes that lose the wicks here and that lower third standard deviation. That would be the conditions where we either already looking at price action headed down to that 58 to 60 level, or potentially, if it hasn't done so, closes under there, likely going to be the main target. Any break of that, we're looking, mid 50s and then potentially upper 40s to lower 50s. So 48 to 50K. And then on the other side of that, range bound to the upside. And in fact, that's where, even a swing above the range highs here, looking 68 to 70, we have our support and resistance zones of interest up there. And nothing has really changed, right? We've got the daily areas of interest there between the 68, 69K, but really it's all about 68 to 70. And then we can start opening up the 72 to potentially mid 70s above there. But this Bollinger Band set is sitting right in a very important area. It's a weekend, lower liquidity. We'll see what actually comes of this kind of stuff here. But enough of me following up with what I've been talking about for a very long time. And I have been repeating myself a lot lately because Bitcoin is just stuck going sideways. I'm going to introduce you all to Tony here. He can correct the how I said his last name in just a moment. And yeah, and I'm gonna let him introduce himself, and then I'm gonna start badgering him with thousands of questions. No, I'm just kidding. Let me get him in here and say hello. And let's switch over here and get the charts off of the screen. So, Tony, how are you, sir? Thank you for joining me today on the live stream. Would you like to go ahead and introduce yourself?
Sure. And man, you butchered my last name so bad, dude.
I'm sorry. I'm sorry.
No, you got it. It's perfect. It's perfect.
Okay, perfect.
You do better than most. I get Sereno, I get Soriano, I get all kinds of weird stuff. So, dude, you did great. So Tony Severino here, comma CMT. I'm a chartered market technician. Um, and I'm one of the traders who talk on Tuesdays during Market Talk, part of the Wolf Bitcoin crew. That's how Landy and I met. And I've done some shows with Bits of Wealth there, and some of the other guys. It's about time Landy and I got together, definitely. So we always have really great chemistry on the show. So looking forward to what we're going to be doing here today. What I tend to do a little bit more time-based stuff. I like cycles and overall whatever the crowd's doing. I'm really interested in. I'm fascinated with the crowd psychology, which has me drawn to things like Elliott Wave principle, Hurst cycle theory, Japanese candlesticks even are something I like because it says a lot about the sentiment. And I'm always kind of really thinking about like what is the most contrarian thing that could happen in the market? What's going to cause the most max pain? And then I try to then fit that with a narrative, technicals, levels, everything that kind of comes along with markets, potentially intramarket analysis, potentially macroeconomic indicators. So it's all kind of there. In fact, one of the big things I'm kind of arguing right now is the fact that like black swans, yeah, they're unpredictable events in the grand scheme of things, but their patterns are in a chart just like anything else. And in that way, when I think about it, is it really a black swan then? So I don't know, but some of the topics maybe we'll jump into
Well,
today.
I mean, you just hit on one of my biggest pet peeves is people calling black swans that literally all of us were describing the actual events well ahead of time and our
Mhm.
projections well ahead of time. It's like, oh my God, it's a black swan. No one could have ever predicted it. It's like, well, we're not in the game of predictions, but we were pointing out the conditions that would lead to this kind of stuff. Um, I'm of the opinion that there is no such thing as a black swan or a white swan. I've argued this with macroeconomic experts, people at every level of some financial institutions in my time in New York and Chicago. But yeah, it is. It's one of those things that look, if you're really practiced and understand the charts, the charts will lead the way. It has a lot of the sentiment baked into it, right?
Mhm.
Now there is outside indicators of sentiment, and of course fundamentals do matter, but the market likes to price things in, and sometimes the market gets surprised, but that's why we account for it in our analysis. So Tony, how long have you been doing this?
So, well, I've been a CMT since 2024. I've been in the crypto space. I mean, you can see the grays, so it's been a while. A good 8 to 10 years now. I'm trying to think exactly. Yeah, so 2017, early in that year, right before Bitcoin kind of like really took off, and
Yeah.
yeah, so a while. And then, yeah, a little bit more seriously technical analysis wise, probably since 2019, right before COVID and everything. So I kind of recognized during the 2018 bear market that it didn't make sense to hold my Bitcoin. And I saw it and like, hey, I can see that there's patterns here and there's something going on. If I just sold high and bought low, I would have tripled my Bitcoin. And I just literally started doing that. And from there, it turned into more and more and more. And
Yep.
here I am today.
Man, the sky's the limit. The limit. I to look over, and the first thing I see is white swan, and a rocket emoji from Milo. Thanks, Milo. Oh, geez. Much love to Milo. I see. We've got a few friends in the house here. We've got Trade Flies here. Bits is here. We got Ryan in the house, and of course Milo, and a few others I see in there chatting. Please go ahead and like and share this out there, guys. I really do appreciate it. Want to make sure that people kind of see Tony and I kind of go back and forth probably here in a little bit on some charts. I imagine we will agree on a lot more things than we disagree, especially considering some of the things that I went on. I jumped on the other day to talk to Bits, um, and of course, it ended up being an extremely long live stream, but It was a good one because there is some things that I think you're looking at that I am also seeing. And whenever you're ready, you can share your charts,
Yeah.
and we can kind of just dive right into it, man. Um, and while you're kind of doing that, one of the big things that I immediately recognized about your analysis is that we have an incredibly similar outlook on the markets in general, right? In terms of the types of analysis, the tools that we use. Um, Now, obviously, the audience, I stick to Bollinger Band sets. I'm of the opinion that every single system, and this is, I guess, not my opinion, but every single system, and I've said this for a long time, that the base of every single system is the same, right? It's all derived from the same thing. We're all working from the same data set. So it's, trend, which creates support and resistance at the swings and closes. Um, and then volatility, which is the dispersion of returns. And then, of course, that creates momentum. And every system, um, it has some portions of this baked in at some point, right? And what I really, really enjoy about your analysis is that you are so well educated and so well studied in the various systems, and more importantly, that you are able to break it down in layman's terms for folks. And that's something that, I've had to learn to do over time myself, coming from talking at a very high level about something, and then bringing that information and making it digestible for an audience that is not familiar with all of the intricacies that go on, behind understanding how a lot of these systems work. So I see here that you have, you've got your ABC corrections, your WXY waves, and corrective structure out there on the chart. So why don't you go through and kind of break down what it is that we're looking at? I'm actually going to full screen your chart so it's a little bit easier for the audience to see.
Sounds great. And yeah, let me just say thank you so much for that compliment. I really care a lot about putting things out there in a way that people can understand, whether it's my charts being clean and having arrows pointing to things and trying to get it to be as most understandable as possible, or I'm using analogies and examples from everyday life, music, whatever I can to get people to wrap their heads around these things. And so I really appreciate that you recognize that about me. It means a lot. So thank you so much. And then I'll jump right in. But yeah, excited to talk to you about the Bollinger Bands. I know that's one of your tools, and we always kind of geek out over that.
Yep.
So we briefly touched on this during the quick exchange we had on the last market talk. And so this is a little bit older of one of my charts. Honestly, I've since revised this count quite a bit. I don't believe this is an expanding triangle anymore. I'm actually more of the mindset. We're looking at an expanded flat.
Okay.
Still, though, similar targets. Looking at this Bollinger Band basis line, which is now starting to come down. So why am I looking for an expanding pattern here when, we've mostly been in all these other tightening patterns and things like that, tightening, contracting, consolidation.
Mhm.
And it's because you can see right here in the behavior of the Bollinger Bands, we are getting expansion from the tightest point of Bollinger Band monthly chart ever on Bitcoin. So this is notable. It's when you get this sort of squeezing behavior. I'm sorry, this tightening behavior. It's called a squeeze setup, as you know.
Yep.
And from that squeeze, it kind of tells us that the low volatility phase that we've been experiencing is about to end, and it's going to switch into a high volatility regime. And when that happens, you get more volatility, and volatility, like you said earlier, is dispersion of price. So this is volatility right here. This is price moving higher and expanding and becoming more volatile over time from a point of low volatility. If this was a contracting triangle, we would have volatility here, and then it would kind of come to a point. So I think again, we are seeing a situation where volatility should be picking up, which is why I'm more so considering some sort of expanding, broadening pattern here.
Yeah.
But again, revised a little bit in terms of my counts. This one is still the expanding triangle, but this one was important for me to show. So again, not only do I like the Elliott wave stuff, I like Japanese candlesticks. I like a bunch of things really, the Bollinger Bands, as I just mentioned.
Mhm.
But I tend to more so mostly be the cycles guy. Like that's what I like. I mentioned the other day, someone when I first got into all this told me like, hey, you can't time the market. Like timing the market better than timing the market. And while I do actually agree with that statement, I really
Mhm.
took it personally that I was told I couldn't time the market,
Yeah.
and I
Yeah.
shouldn't have. And so I made it my thing. I made it like my life's goal to like prove this guy wrong and be the guy who times things. And I've become fairly successful at it. So I traded this whole entire bull market based off this cyclical behavior
Yep.
in cycle theory. You get the amplitude is at the middle of these semicircles. This is where the momentum's the strongest. It does not necessarily mean the peak. It's where momentum's the strongest. And if you have a strong trend, it usually can carry over and start to roll. So what I did here is I did an average of the right, every single one of these cycles topped out with some right translation.
Mhm.
So I'm trying to figure out, when does this one top out right here that we're in? Because I for a second there, I was like, this kind of looked like it topped out. But, if all of these have been right translated all along, and if I give this like an average of, 7.4 bars, which is where I came to, that puts us right in mid to late August, which is kind of what I've been saying all along, is we may see some bullish movement until then. It was weird though, we did make this lower low here. I have to admit, I wasn't expecting that then to come back up. I thought we would probably maybe do more up here. It didn't end
Yeah.
up happening, but there's reasons for that. Again, this expanded flat pattern, and even that really explains a lot of how this sort of develops. And I think that's where I am here. So now I'm looking for a WXY wave, and an Elliott wave principle. Uh, Things alternate. So if you look over here, these are very sideways corrections, whereas this one's much sharper. It has a lot of different things going on. This is a combo wave. These are simple.
Yep.
Uh, and so in that case, we had an expanded flat during the last bear market, which is a very simple ABC. Even though it's a pretty big and nasty pattern, it has an impulse and the C wave, it's still a simple ABC. So I'm
Yeah.
more so expecting WXY here. And the most recent WXY I could find in the chart was this guy with COVID. We
Mhm.
still have, our similar impulse up, and it fits that expanding behavior. And if this is an expanded flat, just like during the last bull market, we had this big move down here that ended here. Well, that was an impulse wave. So this would be like an A, B, C, and the C is an impulse. So this would move up really quickly and really strong, and I think surprise people. And
Yep.
then if we haven't truly satisfied, so in Elliott wave principle, you have price targets and time targets, and most are related by a Fibonacci relationship. And if one of those targets is not truly satisfied, what happens is usually the wave then morphs into a combo, and the combo wave will do something unexpected, but eventually satisfy that. So that's what happened here in COVID. It came down, it just didn't go low enough and wipe out enough of this. So it came back up, popped up, broke a trend line, and boom, back down.
Yep.
Very similar to the setup we have here.
Interesting. So, I this does fit. Um, so I'm a confirmation guy. Like I'm a big confirmation guy. I'm less of an Elliott wave guy than I am a you could consider what I typically talk about and present to the audience here as fairly simplified technical analysis with a lot of the meat and potatoes maybe hidden behind the scenes for what I look at. But realistically, what I end up looking at is um, support. The trend,
Mhm.
whatever the dominant trend is, the support and resistance based off that trend with the confluence of compression to expansion or expansion to compression, right? So when you are looking at this, you're essentially looking at a weekly. What I'd like to do here is let me go ahead and this is I believe you have a weekly chart up, right? Is that a weekly
No,
or is
actually, it's
this
a
the
daily, but it's a line
daily?
chart. So
Okay. So if we were to pull the weekly up here, and I'll just kind of throw mine on here, um, because I'm curious your thoughts on this. Let's see if I can get mine over here. Um, so what I'm looking at for a Bollinger Band set, I have a triple set, typical 20 simple moving average basis band, and then three standard deviations to the upside and downside. Obviously, what would normally be an upper band and a lower band is your second standard deviations. Um, we moved from a big expansion into a compressive mean reversion kind of a look because in this expansion down while we were still getting the downside expansion for the Bollinger Band set, we mean reverted to the basis and all the way to the upper first standard deviation, essentially. And then we came back down as we are compressing and hit the lower second, kind of sat on it, and now we're sitting on a lower first standard deviation, which can be confluent with like a 5 period moving average. Sometimes it'll line up with your 9 EMAs, and so essentially, what I look at this as is a range compression, right? So the only way for me to see resolution would be, a resolution with a close that breaks the lows, obviously, and
mhm.
then also starts closing below the lower second standard deviation over here. And then its lower thirds are really good for price replace bands. So if this is a weekly and we closed the lower second, the next area I'd be looking for the next week would be where the current week was in terms of, 48 to 50K, for instance, would be the next big area. It's also confluent with the bear market lower high last cycle, the post ETF highs, and then also the higher low. So we have the post ETF high or pre to post ETF high for the spot ETFs, and then we had, of course, a nice higher low on higher term timeframes in this downtrending structure that found support there, and then changed structure for the next move up. And what I would be looking at, and when looking at your chart, so just real quick, we'll go back to your chart for a moment here. When you look at the expanding flat, right, or if you look at the you're essentially looking to you're probably in and around the $90,000 region, like on the top side there, right? With your
Yeah, absolutely targeting
with your
88,
X wave.
87 is really what I want.
Okay, so let's go back and take a look at where the upper third standard deviation is on my
Check it
chart
out.
here.
Watch. Yeah.
And you'll see that that is exactly where the upper third is, around 88, almost $89,000, right? And of course, the way that I look at this is that if we were to breach, because there's a few things going on here, because I am a trend first guy, um, that break to the upside, that if it did not, it tries to reclaim these lows, maybe comes into the POC of this range before the drop. If we didn't get a close outside of the upper second and upper third on a close over close basis for momentum and expansion, very highly likely you just run the bands right to the expanding bottom side of those bands, which would be in that case, you'd kick off expansion to the upside, you get the fake out, you take all the liquidity, and it runs the opposite way to the opposite side of the bands. I call it running the bands. I forget what John called it. But essentially, you're looking at that as your resistance unless closed above, and then the downside as support unless closed below, right? So this is where we have confluence with something that I have not presented to my audience at all, in terms of Elliott wave theory, or specifically, you have a target here that of course comes in right at a monthly. This is $35,000, right, on the impulsive move down for a
Yes.
larger expansion. Here's another interesting part. Man, this is really interesting, isn't it? Um, Now, this is something that I was talking about with you, and I know that you're looking at the Bollinger Bands on the monthly, right? So when looking at Bollinger Bands on the monthly here, um, where we have the weekly lower second standard deviation, and this would be, if we drop the lows and we continue down from a weekly standpoint, the monthly is sitting right around where the weekly lower third is. And it would likely expand down intra-month, right? While the monthly candle's still open. So right now it's at 51. But if we started to lose the lows on a weekly before the August close or something like that, this is going to end up pretty much in line where the weekly lower third is currently, right in that zone around 48, 48 to $50,000, right? So essentially looking for, there's obviously the 45.5 area down here, but essentially we would see confluence in that area and somewhere around, the low $50,000 region, kind of coming in right between 48 and 50. This is index, so it's going to be a little bit different than some of the spot charts. So there's also one other thing on the monthly that I know you are paying attention to, because I could tell. I already know this, so this is a bit of a leading question, but if we were to spike above that basis band, sitting right at $88,000, right? So like, I think I think we have way more in common, very different styles, way more in common in the way that we are looking at the potential if it does meet certain conditions. So I guess my question to you is, what conditions do you need to see from price structure right now to meet what you have here a in terms of an X wave?
Great question. So I really just need to see this let me make sure I'm on the right chart here. The impulsive behavior right in this, like this needs to have a certain 5-wave structure. The wave 3 needs to have an extended 5-wave structure of its own. And it has to move fast. It has to get everybody the right sentiment. It has to get everybody really excited, as if the bottom is in. People got to leverage up more than they normally probably would, because there's just such overconfidence. And then, I do want to see if we don't get the higher high here, I don't really think that maybe this is an X wave anymore. Maybe it's just a larger ABC, or I don't think it's the flat. And instead, we're going to get the double zigzag that I had originally been looking for. It's just, again, with the whole double zigzag thing, I really just don't see that from the sense of the previous couple of charts. Like, that doesn't explain why we would still potentially right translate if there's more amplitude here. And it doesn't quite explain, meeting some of the technical indicators that I've called out. So like, there's enough rationale behind it as to why I still believe, it will meet those sort of those numbers and everything. And then when I was marking out my levels, so I put 90 sort of as the highest I really would, like any higher than here, then maybe I need to consider it is the bull market, and it's not corrective anymore at all. I do have to, so even though I have my primary count in what I'm looking at Elliott Wave, I'm trying to anticipate the move. I do it based on, I count everything all the way as far as I can go back and keep counting till it all makes sense. Sometimes it does, sometimes it doesn't. A good example is, a lot of people were looking at this as a 1, 2, 3, 4, 5, but 4 cannot come into 1. And so that eliminated that. So, as the patterns develop, you start to understand more what it is. That has brought me to what this is. This is the best analog. I mean, look, we're literally putting in inverse head and shoulders down here. And I already had called, like, we didn't even do the right shoulder yet. I had put this on the chart already. And then bizarrely, if we moved up from there, it was a 38.2%, and then back down was a 61.8. So I had all these sort of Fibonacci relationships as well. And then this is just the line chart. If this was the candlestick chart, you got those big wicks that came all the way down. So still puts my 34.5K target sort of into play.
Man, so this is super interesting because you're right in line with Nat 9. I think Nat pretty well.
Yeah.
she's got 35 at the extremes as well.
Crazy.
I was asked what would my extremes be, and I said 38 and a half to 42 and a half, or 42.6, somewhere around there on the extremes. Um, if I was going to be really pinned down to it, because and what's really important is what you just said, is where is the invalidation, right?
Yeah.
Above 90, you'd have to reevaluate, because that would be your invalidation. Um, Now, of course, I imagine you're looking at closes, right? Because you're using a line chart here, so it would have to be on closes above there, not just random wicks on the Binance chart. You don't see it anywhere else, kind of a thing. Um,
Yeah, I'm glad you actually mentioned that. So I'm actually really strict. I don't like wicks, and when I'm doing my Elliott wave counts, look, we're in crypto. It's the most volatile asset class. When all this Elliott wave stuff was developed, computer like algorithm trading wasn't there as much. It just the wicks can just really get exaggerated in this asset class due to the volatility, and it just makes me want to take it out. So I rely on closing price data as much as I can. I still like my candlesticks for understanding what happened during the session, what's the signal from it, and all that. So I'll look at both, but for Elliott wave counts, I do like my line charts usually much better,
yeah.
and try to ignore wicks.
So, and then you obviously, because you have, you're multidisciplined when it comes to this stuff. Are there other, like, indicators that you use to validate or give you a deeper view outside of the chart itself, outside of the price chart itself?
Yes. So primarily, what I use for confirmation would be like a breakout above the upper Bollinger Band, below the lower Bollinger Band, and then I would look for some sort of signal to accompany that, just to make sure that I'm like increasing my probabilities as much as I can. Something like a real big volume spike. I want to see the RSI passing above or below 50, depending on which the direction the trend is in. Maybe a move above 70 or below 30 on the RSI. So I have
Mhm.
all these sorts of things. So I mentor via Slice, and I use what's called my synchronicity system. And I know a lot of people. I actually am a huge advocate for people to just do the one thing right. But me, like you said, I'm multidisciplined. I like to have lots of things telling me this is a good trade, Tony. I don't, if it's just the one thing, I never just trust one. I just can't. This is the guy I am.
Yeah.
So, and I also, again, as you can see, I kind of like to try to I don't want to say predict, but I want to prepare. I want to
Yeah.
have an idea of what's coming. So I'm primarily showing this because it is my primary, but I do have some other things. I have a bullish count. I have another bearish version that doesn't go quite as deep. I have one where we're resuming a bull market, but we still, end up with some new lows first. So, there's a few different things. And with Elliott Wave, it's like it is speculative to a point, and that's one of the reasons why I actually don't promote it all too heavily. I went to go start my CWA, Certified Elliott Wave Analyst certification.
Hmm.
I've passed level 1, and I just saw so many analysts out there. It was right around the time when Bitcoin topped with this extended fifth wave idea, and it made
Yeah.
me upset. Made me upset with Elliott Wave as a theory, because I felt like too many people were abusing it. So I didn't even go through with the rest of the. I may get credentialed eventually, because I still love the practice, and now I've kind of we don't see as much of that now, so I'm in love with it again. But that was truly why I just saw. Unfortunately, I understand why people look at Elliott Wave sometimes and like it's garbage, because there's so much garbage. It's too open for interpretation. But
Yeah.
when you follow those rules, guidelines, you get the counts right from the small time frames up, and then match it with indicators and stuff, you actually can do a really good job with this stuff, and it's super, super helpful. And just getting the right trade set up, knowing where you are in a trend, how much time is left in this trend. Maybe not a lot. The wave structure will tell you that. So
Yeah.
that's what I'm saying.
Yeah, it's interesting because I studied Elliott Wave for quite some time, and I ran into um the same thing that you did. And that was, all right, one of two things is happening here. Either they're wrong, or everything that I'm studying about this and everything that I know about markets to this point is wrong. And I'm going to say that I think some of these folks are wrong. And what it did is it actually, and for some of the folks that were helping to mentor me in Elliott wave theory, um, they got a little bitter. They got a little bitter with me, and I was like, look, I'm going to show you what my thoughts are on this stuff. And you're either going to accept it or not as valid. And then, the market will prove one of us correct and one of us incorrect anyway. So, um, and that's actually something it's something that I really like about the crew that Kate has put together on stage for the Wolf Bitcoin spaces. And then there's others that are outside of that that I associate with. Um, is that we can have healthy debate without getting nasty, because then it just ends up being a measuring competition, if you will. Um, in reality, dictates that nobody analysis and trade setup are two different things, right? Like higher term time frame analysis feeds into what you might be looking for in terms of a trade setup. But then it's all about, a trade setup is something completely different, because that is, you really managing risk and where you want to get in, where you want to take profits, where you want to place your stop loss in relation to all of the hard work you put in on the charts, right? And this is something that I think, often gets lost in the conversation, especially on social media platforms when people are putting out analysis. You put out something that is a theory, you give the invalidation, and then you immediately get a comment like, oh, that's BS, the low is in, yada, 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 or that's BS, the high is in, yada, yada, yada. Or you were bullish the other day, and it's like, okay, well, that chart was a lower term time frame chart. This is a higher term time frame chart, right?
Yeah.
Um, and a lot of people are here just to say, well, which way is it going? Just tell me. Because they want you to have the crystal ball. And what they don't understand is a lot of this is formulated around trading and evaluating risk and positioning around that risk. And I believe I wasn't on stage with you, but I believe you had this conversation. I want to say it was last month or maybe a month before. You had you were gone for a little bit, and then you came back, and you were on the show with Cade and the crew over there. And I believe you talked a little bit about that. Something that I was like, look, man, we need so much more of this in this space, especially with the ticker. As soon as we do get positive um, structure in the markets, and we do have any kind of uptrending structure that is looking bullish, we get a flood of tickers and a flood of charts to bait people into those tickers, right? And I think that one of the theories that I was kind of floating out there is what you had just shown is something that, I'm watching as well, with a potential move for an impulsive move or an expansive move from here to the upside, and where we could potentially go. And if it does happen, we will hear everyone say the macro low is in well before anything is ever confirmed. Even if we were to break structure to the upside on a monthly and close it and all this other stuff, where we would be looking at potentially a macro low being in, it doesn't change anything, because you need to see the next move down. It doesn't matter how high price goes. In reality, you need to see the next move down. Now, I know you have a longer form chart here with some of the corrective percentages. And this, of course, is right in line with cycle theory, in which I was called many different names. Then they were not kind when I was talking about cycles are not dead. And I see that you have a projection and a little bit of mathematics behind it. Why don't you go ahead and explain what we're looking at here?
Yeah, I mean, look, so the next series of charts, I'm going to just kind of justify why I think 34.5. So, I said 35, but my exact target is 34.5. And the original, so I actually bizarrely called that price. I look back in my feed over like a year and a half, long before Bitcoin even ever topped. I, for some reason, said 34.5. Don't quite remember exactly why I said it. I think it was an Elliott wave thing. In fact, I think maybe one of the charts might kind of jog my memory a little bit. But the other thing was based on the percentages, like we have just a slight less drawdown after each major correction. And then, so I took how much less drawdown each correction was. I added them up. I divided to get an average. I took the most recent one, which was 77%. I subtracted that average and came up with 72%. It's about as simple as it can get. What's fascinating, though, if you take 126K and apply that 72% drawdown, takes you to 34.5-ish. So, again, interesting to see that the percentage that I happened to come up with through all my math just happened to match some of the stuff that I was looking for around, the 34.5. And interest is an interesting thing I'm actually going to quickly talk about. So we're talking a lot about later. I was if we end up having time, I have some longer term charts talking about Bitcoin potentially moving into a secular bear. And essentially, actually, where's it going with this? Yeah, I got it. So we see a lot of people saying we should get a lesser drawdown here. Well, I have been so adamant against that. I still see it in the 72%. Well, I have been thinking that during our secular bull market, we had these nasty downtrends. Well, if we turn into a secular bear market, well, are our bull markets suddenly like sharper and like move up straighter? And we're like, whoa, what was that? But it's over faster. And the whole thing sort of changed. So maybe we don't get as much drawdown here. But it was a real fast, sharp one, and that's kind of we move up fast, sharp again to the upside, come back. So I'm thinking, have conditions potentially changed? So I think if we actually do bottom at where we are now, and we have bottom, it's like a 38.2%, Fibonacci, I should say, ratio, where we've landed. That is one of the lowest in terms of Bitcoin, in terms of retracement, Fibonacci retracement. And that might be a sign to me that some sort of condition is changing. Maybe not, though. That's pretty speculative. And again, a lot of the things that I talk about are speculative. I very much am aware of that. Again, more preparation, more because I like to do that stuff. It's what excites me. And then, like you said, then I drill it down as low a time frame as I possibly can to trade it, to get entries. I have my spot investments and stuff that is more some of this long-term stuff, but overall, I'm actually way more of a trader. And I take my sometimes day trades, sometimes scalps. I'll get in and get out in 25 minutes. You know what I mean? And then, but it all truly kind of stems from this because like the trend is your friend. So when I decided, all right, we've topped, I then switched my mindset to more bearish strategies and more capital protection versus risk. So just again, moving along, this is probably one of the most obvious was really just the golden ratio 0.618 retracement being literally 34.5. Like it couldn't get more, you know what I mean? Like it's like it's there. So, and Fibonacci is just one of the most fascinating things to me. I actually got it tattooed on myself. I got a spiral.
Nice.
So yeah, thank you. Big deal for me. Just means a lot. And, okay. So yeah. Back to a little bit of Elliott wave stuff, and again, interesting that this lines up so well with this Fibonacci ratio because retracements in Elliott wave move to certain Fibonacci ratios. So I have this area highlighted here, and basically there's this little tiny 3-4 in here. There's a bigger 3-4 right 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 here. And that's the frustrating part about Elliott wave is there's like a million waves, sub waves inside the waves. And it's like, it can be super confusing and trip you up sometimes. But when you get it right, it is pretty good. So one of the things I've noticed in Bitcoin is it tends to, it bypasses, first comes down to the biggest 3-4, and then comes down to a smaller degree 3-4, usually a lot smaller degree 3-4. And now I have examples of that in previous corrections. So you had your one, and your small degree 3-4s, your larger ones up here. And then this is ending diagonal. So came down and touched that same sort of lower degree 3-4. Same sort of thing. Larger degree 3-4, lower degree 3-4s comes right down in here. Here's your 1-2, 1-2, a bunch of 1-2s, and then it starts the impulse. So you're in a wave 3 when things start getting super impulsive. So again, I'm looking for that sort of behavior now, right in here. This was an impulse. You see the, wave structure of all the different subwaves similar to this guy. It looks just like this, but
Yep.
this is during a correction. This is a counter trend. This was our trend. So yeah,
Yep.
so that one's an interesting one. Obviously very speculative, but I mean, we can see that past corrections have come down and done something similar. So I don't really have any real reason to not think so. Other reasons are, the 50% mark on large Japanese candlesticks act as a support and resistance zone. Really important ones. So I just kind of marked out, and this one I showed, we came down, we touched that literally to the dot, and then we swept it, and then the bull market started. Over here, literally touched the 50% mark on this guy. And this was sort of like the breakout. This was the breakout. Well, this was the breakout. If you drew a downtrend line across like all these things, one here, one across here, one down here, this is the first big candle after breaking out of like a bearish phase. This tends
Yep.
to be where price retraces to on a closing basis. So again, I have 34.5 marked out over here. It's to 50%. I'm actually, as I see this, I marked it a little high, so probably a little bit lower, maybe 34 on this guy.
Yeah.
But yet another chart, different methodology, still examples of recent behavior where it did what I said it's going to. So there's a high likelihood, in my opinion. And I'm going to keep going. I have a head and shoulders here. You take the measure rule and you apply it. Boom. This is 34.5. I got patterns, I got wave counts, I got cycles, I got technical indicators, I got measurements, I got GAN fan stuff.
GAN fans,
this.
yep.
This one's just more for fun. I mean, look, I just love this stuff and like to have fun with speculative stuff, as you can see. So I don't even give this one much weight, but it was like, hey, look, even the 0-0 line here above, that's what I forget what it's called, I think. But this is below here is bearish. This is very likely where something would come down and kind of hold from. You can see, it very much sort of like fit all this and found support along this and found support here. So these and this is really just sacred geometry. This is angles exist everywhere, and for whatever reason, mathematically, you see support and resistance levels along these angles very often. So, I don't think really anybody knows how this scan fan fully exists. I've always researched it and there's really nothing concrete out there, but it is fun to play with sometimes. And, but yeah. And then now I remember you mentioned the Ichimoku earlier, your friend there. And, I'm not the greatest with it, but I have learned a good deal over the years. And your Chiku span or your lagging span can show you where support and resistance is. Well, you literally showed us where the resistance was here. Support. Look at this thing. That is so unbelievably clean. And then where's the next one? I mean, it's right here. And here's 34.5. Our cloud is sort of, right in this area. So there's a lot here telling us that this very well could be our sort of final support area. I think I got one more. Yeah. And this was just, I know a lot of people have this. I even myself at times draw it where it comes across here. But if I just drew it along the wicks, well, look at this guy. It comes to 34.5. I just was in shock when I went through this because it's just like, I know people are so quick to, it's great. You mentioned earlier about the how it's going to trip everyone up and they're going to think that the bottom isn't. I'm banking on that. That's what I actually want to see. I want her to be like, see, Tony was wrong. That moron, Tony the bear, bottom was in, he's got it all wrong. And they're going to be so complacent and like cocky in that. And I'm just going to sit back and wait and watch that shit cut right through everybody like COVID did. And I'll be sitting waiting at the bottom ready to buy and go long at the right levels. And look, hey, I could be wildly wrong here. You could never see 34.5. Everybody will forget. Everybody will forget. There's so many wrong calls. But if I get this right and been calling it for 2 years and I have dozens of charts talking about it and been talking about it for months and being as loud as I can, dude, I'm a legend. This is the best risk reward is the best thing I could do for myself. So I'm gonna yell it. I'm 34.5. Like, you know what I mean? It is what it is. So that's my thinking as far as around that goes. And I think, do we have any more? No, now I'm in long term thesis. You're like, how deep you want to go, Andy?
Well, it's funny. So I'll take and show you kind of what I discussed with bits, and obviously I have the same kind of outlook, same levels. We're operating off the same basic principles, so we're gonna have a ton of similarities in what it is that we are looking for here. And this is the monthly, um, and 0 to 1, right? You're pulling your zero from the highs to the 100% at the bear market lows. We have a confirmed, bear market structure, all that good stuff. The 382 right there. Obviously, if you pull it the other way for extensions to the upside, folks, a 382 is just a 618. So this is, right in that pocket, the 618, same areas of interest. And you could see that even with a massive a drop, you if we were to drop through to, like 44, 45 around this high and come up short of a log scale 50% fib, that would be interesting. But more interesting would be any kind of a reclaim of those highs, anything
Mhm.
in the mid to low 40s. And honestly, from a monthly time frame, anything that closes below, the 48 to 50, it's going there, and it's opening the door for, 34 to $35,000 no matter what, right?
Mhm.
Lower third would actually indicate, if that were to occur, especially sooner rather than later. And the longer that Bitcoin stays away from this 20 simple, we're going to start seeing the band start to turn down even more aggressively in any kind of an expansion. You're going to get that lower third that's going to hit right at those highs. And we have confluence with wicks over here in the 30,000. Then you start to look at 30,500 to, right around that 31.8 to 32,000, this close open monthly right here, from the breakdown to the final low, kind of coming in structurally, because this was a mess in here. It was just sideways consolidation before a final drop. It was all one move in my book.
Mhm.
But moving out to like a quarterly, this is where things get interesting. And you
Yeah.
mentioned this the other day, and I've said this when I jumped on Bitstream. As I said, what's really important is where price is right now. If we drop the lows and we start hitting some of the weekly conditions to the downside, you've got, a little less than 2 months that you could see this under the basis band for the quarterly here.
Mhm.
It is right where price is, essentially, right? We essentially, we've tapped it this quarter. We tapped on the basis band. And if we were to then move into Q4, what we're going to get is a lower first is going to move up to, guess where? Right around the 31.8 to $32,000, headed towards
Ooh.
that 618,
Yeah.
which is going to be around 34 to $35,000. So this is what's interesting about the quarterly. So, Bitcoin, still considered a young asset when you're looking at it on higher term timeframes like this, because removing the fibs there, what we've seen here, and this is one of the reasons why I like a triple band setup. When we get the expansion, we've always gotten expansion to the upside, and there's no real chance of expansion to the downside for a very long time. So one of the things that we have seen here is lower first will drop off the chart as soon as we start closing above that upper second standard deviation, away from the basis. And we didn't really start printing a basis. There was no basis until 2014, and fairly late into 2014 in July. And we've deviated this basis. We did it last bear market. So there's also something really important here. There is no expansion. This entire bull market, the entirety of this move off of $15,500 all the way to 126, there was no expansion. And this is one of the reasons why I was calling for 123 to 125, and we would need to see 128 to 130 closes on the quarterly time frame, or we were going to put in not only a local high but a high percentage chance it could become a macro if we change structure. And that's exactly what we did. which is the
Crazy.
reason why I was screaming about 123 to 125. I was $1,000 off. I still got people that harpoon me for being $1,000 off. What the hell is wrong with you people?
Right.
Anyway, in a stupidly volatile asset at the highest
Ugh.
$1,000 off. All right.
Like
But
within 1% of the total price of Bitcoin you did,
yeah,
and they're still not satisfied.
and I think you and I actually were talking when we were still in a bull market, and you did have your bear thesis for if the highs were coming in.
Mhm.
Um, and I don't think you had shifted yet. And I was in the camp at the time of if we put in a high here, I'm looking for a local top until something changes, right? So I'm willing to be late to calling it a bear market, right? But I was looking for that 123 to 125. I know you were in and around those same similar areas at that time.
Yep.
And we had been talking about it that summer before 2025's high, right? We were talking about it summer into fall. And then I had been talking about the Q1 to Q2 transition and where the rubber is going to meet the road as we did see the high come in, weekly structure changed, Q1 to Q2 transition in 2025. And I had mentioned even at the time, doesn't matter who's getting elected, I do not care whether it's Trump, Kamala in the United States, does not matter to me. That Q1 to Q2 transition is going to be nasty. And boy, oh boy, was it nasty. But we had already kind of already really started to violate some of the higher term time frame structure coming into Q1 to
Mhm.
Q2. So one of the bigger things here is with a quarterly that never got an expansive phase. I will tell you, Tony, this to me means that even if we were to form structure here at this area or somewhere around this area, say we hit mid 50s, maybe we hang above there, we start changing structure, we could literally run. And by the way, quarter over quarter, keep in mind, everybody, these bands are going to march on, and because we have a slight it's almost a 3 o'clock here on the basis band 20 simple, but we're still gonna see the residual flattening and still continuing of the upper third expansion ever so slightly up. It's at 143. You could see that at 145 to 148, which by the way is a fib extension up there. Um, but you could literally see a structural compression that lasts for a very, very long time on a quarterly chart.
Yeah.
And it doesn't even have to go much lower. But what would happen if it didn't go lower, which by the way, lower would be the lower first. That's the target. You break down
Mhm.
on the quarterly, that lower first is the target. It's right at 28,000. And
Wow.
in the next quarterly close, it's going to be somewhere around 35. It's going to be there. I used to have projections on this, but they get a little screwy with some of the newer versions of Pine Script. Um, and when I had the projection on for this quarter, which I have since removed, I'll try to release that in an update for this indicator soon. The projection for the next quarterly close for the lower first at this particular angle is $35,000. So there's some
Wow.
confluence for you, but it is a trust me, bro. I have to put the coding back in so that it displays correctly.
Very cool.
But even if we did bottom out here and we did form structure to the upside, you're looking at upper first right at $86,000, and intra quarter you could see that stretch out to the $88,000 range. You got to give it about $2,000 in a quarterly when the candles open. Upper second would be, of course, right back to the highs. You're hitting $100,000. Everybody's getting stupidly bullish. Oh my God, here we go. We're gonna
Stupidly
rip.
bullish.
And then we rip. Oh my God, we broke out, hit 148 to $150,000, and then you just see something like this.
Mhm.
That would be honestly, that would be something that I would be looking for. And what would that look like? That would actually look like us going from a bear market structure into a bull market structure, very compressed bull run to a brutal bear before the next halving.
Really, I know. It's similar to sort of the setup of this X Y wave finale that I've been pointing out, but on the biggest time frame. And what's wild too, man, is we talked about this. I think maybe even the last week. How the upper bond, I'm sorry, the monthly Bollinger Bands, I should say, because they're starting to expand from that squeeze, we absolutely could have head faked down and are going to go right back up to the upper Bollinger Band, which would puts that out in play. And then, the other thing too is that quarterly chart does have an evening star pattern on that chart.
Yes.
And that's a good reason why I tend to think that this one maybe fills out as well. So evening star pattern, this is our yearly Bitcoin chart. So I'm going to start to get into my little bit longer term thesis here. And yearly Bitcoin chart, you can see we had these large white up candles. We only took out a little bit of that candle. Another set, little bit smaller than this one. Now we took out more of that up candle, though. Also notable, 50% mark on this guy. Third and 60, 2/3 here. Also support and resistance. You can see that one went to that. Just like to point that stuff out. It's fun to me that it, things obey it so well. And so now again, even smaller uptrend than when we got here. Now this one fully engulfed the final candle. This, only halfway here, fully engulfed this guy. Shooting star. Shooting stars, I've noticed, are rarely tops for me. They tend to be warnings. Even in this example here, this is kind of like, I mean, not really shooting stars, but especially because it's so long. But it fits it enough. And it wasn't the top. It was decent. It was a good sell-off. And that's the warning chart I've always felt. And it came up. We got our evening star, and the trend reversed. This is a very, very strong bearish reversal pattern. According to Thomas Bulkowski's Encyclopedia of Candlestick Patterns, it's a 71% chance of reversal, bull or bear market. We did get it on the quarterly. And the quarterly has now produced 3 nasty quarters of downside. So, and that could continue for several additional quarters, based on how Japanese candlestick sort of is how things develop after you see a pattern. So the reason why this is so important to me is, well, if this triggers and we just got 3 quarters of downside on the quarterly from an evening star, do we get 3 full years of downside of Bitcoin? I mean, we've never seen a real trend change. That said, though, Landy, I do want to say, doesn't have to come up and go down. Like you pointed out, this could go more side. This could be a sign that we're topping and just momentum's going to go sideways. And I'll have a couple charts in a little bit that kind of show that more. But I'm still more of the mindset, just because of how much percentage Bitcoin has grown over the years, how speculative it is still. I tend to think that there's the volatility picking up tends to point more towards erasing more of what we've seen of growth overall.
Yeah.
So I guess, kind of just pointing out a couple of final things. We're at that 50% sell trigger. You can really see why this level we've been hanging around at is so important. It's that 50% sell trigger, literally right here. So if we close below this on the yearly, close below, say, 62 on the yearly, that's real bad for Bitcoin. I mean, even if it's just a little bit, even worse if we start to get down here and it fully engulfs this candle, man, the more this black candlestick comes down and engulfs this guy, the stronger this whole pattern becomes.
Yeah.
So, again, I think that it could be pretty dangerous, could end up being 3 to 7 years of a downtrend. And again, you see the momentum starting to being so strong here, and it's starting to kind of like wane. I think of it as a rocket ship. If your rocket ship is fully fueled, starting to run out of fuel, and it's not all right, and is it going to come down? Maybe.
Yeah.
I don't know. So,
yeah. That is it. That's really interesting because, if you go to a 6-month basis, right, the 20 simple, interestingly enough, it's right at a monthly right now. We're obviously in the back half of the year. And that is sitting at, 37,365, depending on the chart. Some charts it's at 38. Some charts it's a little bit lower, and it really does depend on where the closes came in across exchanges. I know the index has that 20 simple for like a Bollinger Band set on the 6-month, but the 6-month is also, for the first time ever, you're seeing a lower first start to creep up into the bottom of my screen, which is intensely interesting to me because, and I'll show this to you real quick before we get rolling again, but this indicates a 6-month compression. The other side of this, obviously, for anybody listening, lots of bearish talk, right? And these are all potentials that conditions need to be met for, right? That's what we're talking about, what we're looking at, because guess what? It's a bear market and a bear trend. So that's the topic, right?
Mhm, mhm,
Um, but if this were to reclaim, some of the areas to the upside, you could see a potential expansion out of a 6 month that could go into a 6 month bull run on the other side of that. So there is an actual equal but opposite case to be had, but it is not shaping up that way on a yearly. It is not shaping that way up that way on a quarterly. Quarterly, of course, the area that you literally just spoke about right here is the basis band, right? We just slammed into it. Now, granted, it's a little bit higher for what you were just looking at for the 50% in the 62 and a half range or so. But that's also one of the reasons why we just see price just hanging out, trying to close above
mhm.
there, But you go down much further. Not only do you confirm that, but you're likely losing a basis band. You start hitting mid 50s. You're hitting expansion on lower term time frames. Looking at a monthly, and getting that expansion down that could turn into a grind, right? Because we don't need to see, for instance, this monthly band to the downside. We don't need to see a close below it. We could wick through it and just grind it down and bounce
Mhm.
aggressively and grind it down. It just gets lower and lower and lower. And that is, I'll be quite honest, for people's mental health in this space, that is probably my biggest fear for them. I'll have fun trading, but there's a lot of people that don't trade. So, but yeah, let's go ahead and just wanted a little aside, because it does amaze me how much confluence there is between all of the things that you're looking at and all of the things that I'm looking at here. It really, every single time, it is something that with yourself and others, that just, it's mind-boggling to me, like
It really
how. And it would be helpful if this would actually stop kicking you and I off the screen. Well, we'll just go full screen for now, I guess. So what do we got here? This is oh, okay, this is
is.
interesting.
Yeah. So this is part of how I'm shaping my longer term thesis. I know the things I'm calling for are upsetting to people. I know they're bold. I know they're even difficult to believe. So if I'm going to come with such emotionally charged claims, I'm going to do my damnedest to provide evidence and analysis that backs up the things I'm saying. So what you're seeing here, this is the most recent bull market in Bitcoin from the FTX low all the way up to our recent high to our bear market, which is
Hmm.
a perfect fractal of the long-term Bitcoin secular bull market. And what I'm trying to show here is if our near-term local bull market has ended when this uptrend line broke down,
Hmm.
well, if our secular bull trend uptrend line is breaking down, well, I mean, and look, we have a break. This is our sort of wave 3 peak where the momentum is. I said that earlier in this is during your wave 3 momentum is the strongest during the cycle amplitude. This would be sort of the center of it all, right? That pretty much looks like it would be the center of all of Bitcoin's price action existence. Your amplitude is the strongest, so you tend to get the most momentum kind of leading up to these things. It's also where the RSI is the highest. So you can see momentum truly was the strongest. That's why I came up out of this channel. That's how that works.
Yeah.
So again, so we come down, we're doing all our touches and everything like that. Here's the other thing. Everybody's like, hey guys, Bitcoin bottomed. It came down to this area, the same area as it always has bottomed on the RSI. So that means it's going to do that, guys. It's gonna. Well, we did that here. It came down all along until it didn't anymore. And it
Yep.
went into oversold conditions. And well, so then does this pop up a little bit more and then come back down and we go below all of these and we have not seen that bear market low, kind of just like I've been saying and we've been saying. And it's when I ever saw this and realized that the tops lined up so well and even the bottoms, and like if I threw all my semicircle cycles on there, they all match up. It's very bizarre. I don't know
Yep.
why this exists. This is my Elliott wave. This is to me part. I mean, this matches my counts And now I'm going to show you some more fascinating stuff, wildly fascinating. This is our DXY
Yep.
across 20 something years almost. And then here's our long-term Bitcoin. These tops also align
Yep.
in your uptrend channel. Bizarre, right? I can't really explain this. So really just market fractal behavior, Elliott wave counts across different time scales. And then lastly, I got one. Here is your NASDAQ
Yep.
lining up with our tops in Bitcoin. And yep, we're doing this now. And so I think the stock market, this could be telling us the stock market has more to go. It just got
Yep.
more to go. It's not done with this. It's not done with whatever this bizarre same pattern type thing. And this is our 2022 FTX lowish. Not, I mean, it's the stock market. So I'm just saying that in crypto people terminology. But so we started this uptrend. This would be like our, 1, 2, 1, 2, 3, 4, another 3, 4 up here. And then we got our fifth wave. So we're starting or this started potentially our fifth wave in the stock. To me, we're definitely getting closer to some sort of an end of something. And that, again, if, Bitcoin has mostly only seen stock market growth over its existence and money printing and things like that, and lax interest rate policy and things like that. Well, all that environment has changed. Is what if this is a sign that all that environment just changed? Yeah, it's a weird one though, with all the different asset classes and stuff. And
It
I was
is.
excited to find that one, and I don't, can't
That
explain it.
that well, it's something that I think fundamentally changed in a post-COVID world, right? With all of the printing and then all of the tightening that happened, the pendulum swung from very loose monetary policy to very tight monetary policy, right? And now you have an administration in the United States that is doing what they refer to as a monetary reordering, right? And of course this has effects globally. And when you start to come back to reality, well, what is the reality? The reality is that you come back to the things you can actually touch, hold, and that are actually useful, right? And that's where you're getting a lot of the commodities markets that performed very well, obviously around very specific time periods related to tariff policy, and then obviously any kind of conflicts. But this is also where I'm a generational theory guy, fourth turning. That
Mhm.
is I was literally handed that book when it was fairly new. Now, granted, we're talking late '90s, early 2000s. I'm not as young as I sound, folks. Um, and that was the first kind of edition of that book that I read, and it was kind of informed my entire outlook on the dot-com bubble, which I cut my teeth in all the way through 2008,
Wow.
2009 timeframe, where you know there's been movies made about specific individuals that really rode the media circuit train up and made a lot of money themselves and for the firm, but they weren't the only ones shorting that market in 08, 09. So
Wow.
just let's put it that way.
Yeah, yeah.
Um, there was a lot of folks that were looking at that as a potential issue. Now for this kind of stuff, that's it is there is something going on with Bitcoin that is very different than in prior cycles. And it is not acting the same when looking at it versus the stock market or gold or silver or commodities. And I've argued that that is because as it becomes more widely adopted by institutions, you get all of that distribution from the long-term holders that have been holding since the very early days, which is a more than 50% cohort, not including lost coins. So there is fundamental reasons for why I'm looking at some of the same stuff that you are in that regard, which makes me think that sideways or more downside, um, something has to break or something has to give in a very big way for us to see some sort of further impulsive move to the upside sooner rather than later, even though it technically is there
Mhm.
for the taking. Um, there's a lot of the reasons for why it wouldn't stack up far more than the reasons for why it would, I guess, is kind of my thesis or point
Right.
on that, which is, I think, not definitely not what the narrative is out there in the wider echo chamber for Bitcoiners and cryptocurrency enthusiasts, especially.
Mhm.
It is, well, $1 million Bitcoin by X date. Like, really
It-
cool. What's the path to get there then?
exactly. What's the path to get there? What's the narrative? You've brought up some really amazing points that I think help kind of shape some of this and what I'm getting at and why I think all this is happening technically. And you really said it best is we have just come out of not just a secular bull market in Bitcoin, but a secular bull market in the stock market for, since the bottom of the great financial crisis. It's been, one of the greatest bull markets the world has ever seen. And, like if those things are coming to an end, uh, the, environment is going to change. It's just, I don't know. I guess I kind of spaced a little bit on that thought there. I'm going to go ahead and move forward in
Sure.
my stuff rather than let my ADHD kill me here.
Oh, it's all good,
Uh,
brother.
but yeah. So look, I still got all my long term stuff. I still am looking. This is some cycle stuff. Another reason, I see this big wedge. This wedge is breaking down pattern. It's not, I'm more of the Elliott wave pattern type guy, but it's still a wedge shape. It's converging
Mhm.
price action, and it got retested and are potentially breaking down, and it's fitting with all this cyclical behavior. Again, the bottom zone on this up here. Uh, and then I got some of my cycle stuff. I actually meant to pull that one out, but in her cycle theory, you get what is called a valid trend line. And it's basically just this very simple trend line that's drawn across the longest stretch of trend that you can. Doesn't even have to
Mhm.
have a ton of touches. Well, this is the longest stretch of trend in one straight line. So this is our major trend line, and this has been violated. And when you get a breakdown of a major trend line, I remember my thought now from earlier. That's how this all works. So as you break down from the trend line, it's telling you to anticipate a bottom. So I believe we have our 16-year cycle, which was our secular bull market that's now coming to an end, coming down to find a bottom. These were 8-year
Yep.
cycles. In the 8-year, when these broke down, we had exchange insolvencies. We had the Mt. Gox. We had FTX. We had people who didn't get their coins in the end. That didn't happen here. So far, it didn't happen here either. And as far
Yep.
as I know, I don't think that happened over here. So I almost mentioned this earlier too, because you were pointing out the zero point 0.5 Fibonacci as a zone and around 44K. But this correction came down to the 0.5 Fibonacci. And even in the Fibonacci ratios, things tend to alternate. So it's hard to think that we're going to retrace to the 0.5 Fib again, just based on the fact that we did here.
Yep.
And then, just because I don't want to lose my thought again, what I was saying earlier about the whole commodities and stock market thing is look around us. It's a fearful environment. We have war, trade, we have tariffs not going well. Trade is not the way it used to be. For the past X amount of years, trade was good and prosperous. Countries get along when trade is good. They trade, they profit from each other. When that starts to go wrong, they start to get greedy and they hoard resources. And we've seen that behavior in humans. When COVID hit, people were hoarding toilet paper. So
Yep.
when things get a little scary, the normal behavior is to you hoard stuff because you're like, man, some bad days are coming. It's just an instinct we all have as humans. We don't even know sometimes when we'll start preparing and socking things away. So, I just think we've had this secular trend change from soft assets, speculative assets, risk assets to hard assets. Your metals, your oil, your energy, even your agricultural goods and things like that. Food, I think, is going to be a huge one for this next cycle. Is going to be probably one of the biggest. I hate all of this, but I essentially see like famine and stuff like in the future. You know what I mean? Like so.
Well,
And unfortunately, this is a change, and people's minds are switching to that sort of more fearful type behavior. And it happens in small degrees and large degrees. That's what a bull and bear market is. But that's also what this little correction in during this bull market was. That's still a switch in overall sentiment, just in a really small way compared to this. And that's
Yeah.
why the secular Bitcoin trend ended. It's just a little bit bigger of a bear market. And someday it will have an even bigger one. And it will come back from the dead out of that bear market. And so here's our 4 years, backed it up, 8 years, 16 years. Cycles have interest cycle harmonics, which are at halves and thirds. You get your halves in this one. So that all sort of
Yep.
makes sense per Hirsch cycle theory. And the final chart is if we do get this secular bear market, it doesn't mean we won't see a million. This is $1 million Bitcoin. It's just going to take longer. It's going to take another 10 years. So what? It's going to, you know what I mean? Like,
Yeah.
look at what it's done all this time. This isn't really throw off this trajectory that much. Everybody can still draw their log charts. They can still draw their power models, their quantile models, their this and that, and they'll make it fit. They'll make it fit. They all make it fit. You know what I mean? So
They'll make
come
it
on,
fit
you
for
know?
sure. Oh,
Yeah.
they will refuse to be wrong. They will make it fit, sir.
Yeah.
That is 100% true. They will find a way. This line lines up with this line. I totally called it. And that's, see, this is what, and I really want to impart this upon the audience, because there's probably a few people that have been following me for a long time that will see this on the replay. Um, this is what actual study of markets is, right? Is taking all of your ideas, not just to validate a singular idea that you have, but tracking all of the confluence between the different time frames, and in some cases different markets, because just like myself, I'm sure that you're keeping track of other markets outside of Bitcoin, and the macroeconomic conditions and how the geopolitical kind of fits into all of that and what we're seeing. But we all see it coming, right? Something, right? And one of the big something that we know is a very bloated trade and very bloated valuations, and we don't know when it's going to end, is the AI trade, all of that
Mhm.
capex. All it's going to take is some tightening conditions, and it will start to implode on itself, because once capex slows down, all those deals go away for future contracts for purchases through memory, and then it's all downstream from there, and you see the entire bubble begin to burst. And but reality is, the money doesn't disappear, it just moves.
Mhm.
And one of the bigger things I know, that North Star has talked about, Bits has talked about. I'm not sure if you've talked about it too much, because we tend to focus more directly on price action and kind of theory on where things are going. From what I've been able to jump in and hear when you've been on stage with the Wolf Crew, is that we're all looking at assets, hard assets, having a an incredible long term run. And I think where the disconnect for Bitcoin comes in for many, and this is a particularly scary chart right here for a lot of Bitcoiners, right? A lot of like, oh, 20, $28 million, 20, $30 million Bitcoin, um, is that they associate, like, why isn't Bitcoin being included in that conversation as the hard asset?
Mhm.
And my counterpoint to that has always been, and will continue to be until we see this change, is a fundamental distribution. When you have Bitcoin, Bitcoin is hoarded, right? All of the people that talk about using Bitcoin as money, guess what? They haven't made transactions in like 4 years. It's okay. So like keep telling me how it's money, yet you're not moving it, because you're literally talking about in the same breath, like, no, it's a store of value, it's a hedge against
Mhm.
inflation, but also it's money. Well, you're not using it as money, which means, what are you doing? You're hoarding it. And when something is hoarded, it increases, and you brought this up in COVID, people are hoarding toilet paper, and then literally hawking it on secondary. You see this all the time when, like, Pokemon cards, for instance, people run out, they hoard it all, and then they scalp it. But at some point, that comes to an end. More supply hits the market. Maybe a bigger player is, I got to get rid of this, so I got to undercut everybody, and then it's a race to the bottom, and you get that distribution phase. We have yet to see a true holder distribution phase from some of the earliest days in Bitcoin for coins that are still active, not lost. And that is you see it on the charts, you see it in the fundamentals, and then you see what is happening in the global economic environment. And why isn't Bitcoin being included in that conversation? Well, because it's already hoarded. People have been hoarding it for since its inception for as
Yeah.
much as possible, and we're getting that
Yeah.
slower distribution.
Yeah.
um, there are things that could change that trajectory, and there is invalidations to my analysis and Tony's analysis, and we have clear invalidations. In fact, Tony mentioned it earlier. Even though it might be in passing, right, it doesn't invalidate, actually, even if we did break above 90K, it doesn't invalidate longer term. It just changes the structure for what I'm looking at, because I still think that we're not going to some of those extremely high prices for a very long time.
Mhm.
um, but then again, I would have invalidations for that, and I do. So, Tony, I'm curious. This is one that I don't. I believe there was some other analysts that have also pointed this out that are Elliott Wave guys. What is one of the bigger guys that he's been around? He's still around, not quite as active on X as he used to be. Um, gosh, now it's gonna be a Credible Crypto.
I was about to say credit. Sounds like you're talking about cred. Yeah.
Yeah. Yeah. Yeah. Because I was trying to think of it the other day when we were talking about this. He talked about this in particular, like this, what you are
Mhm.
showing. Um, Last bull market before we broke down. Now, granted, just like I can get things wrong, I believe that he was looking for more upside last bull market. Um, and maybe a little bit more this upside. I think he was a little bit more cautious, but I think that he was right on the money. And in terms of what we've been seeing thus far from you,
Yeah.
you and I have talked about from bull market to bear market transition, you've been right on the money. And you know, I think then it becomes important to, when talking to, because I know you talk to a lot of traders, right? So do you have a trading group, Tony?
I actually don't know. I do it all through Slice. I like more mentorship.
Yeah.
I'm the teach a man to fish type of guy. I don't really like to give financial advice.
Yes, exactly. Same here. Although, I have had training groups before, but they were focused on education. Um, because just like you, I'm not a signal service. Okay.
Yeah.
Like your risk is going to be very different than my risk, when entering trades and markets and stuff like that.
Preach.
And your size might be different than my size and that kind of stuff. So, and with that comes, understanding the actual trade side of the equation to take
Mhm.
advantage of what you're seeing on the charts. And I think that one of the bigger things that I have been trying to focus on more is challenging my thesis right now. And what I've done is I've started to go back to, I'm going to take this level by level in terms of how, and I have broadened the conversation, obviously here with you, a little bit with Bits the other day, in terms of my overall thesis for potentially pretty severe downside, prolonged bear market, a secular bear, that kind of stuff, or a just straight up range that really no one gets what they want. Like no one.
Mhm.
I don't get what I want. You don't get what you want. Nobody gets what they want. It's just like we might as well just watch a distribution, and then we're off trading stock tokens or something at that point, because it gets so boring. Which, by the way, gold has done. But
Yeah.
there is
Yeah.
correlations to what you are pointing out here and gold, which is very, very interesting. I think that, when we have some more time, I might float some thesis, a few different charts to you in the background over the next coming weeks. And I obviously want to have you back on here with me. And I know we've been going for a while here, but did you have anything else that you kind of wanted to show or wrap up with?
Yeah.
Um,
Yeah. So sorry to cut you off. Go ahead.
oh no, you're good. You're good. I was just
Yeah.
curious.
So I think just a couple things that I really truly didn't get to talk about that you actually did a good job touching on, like, is really just the whole long-term holder thing. Like, look how much growth in Bitcoin. You don't think some more people along this way, they start to see, hey, it's not really going up anymore. It's not doing the gains, the annual returns that I used to see. they start to just say enough is enough. I've held this thing for this long, and it's worth 50 grand or whatever it is at the moment, and they bought it at $100. I
Mhm.
just think that there's way more distribution. So the reason why they hold the Bitcoin for so long is because it's went up all this time. But once that kind of changes and you can see that momentum, so if we do get several years of sideways or downside, downside and sideways is what unlocks sellers and long-term holders, not upside. I mean, to some degree, because you need, as price goes up, you hit the all-time highs and whatever price
Yeah.
discovery, then people step in. Of course, they want to make their money, but when it's the cheap prices that get people to act and say, "Oh, I'm buying this now." Like, that's the blood in the streets.
Yeah.
So, and the smart people are the ones doing that. So, I do think that just the percentage gain perspective, Bitcoin should have a lot more unwinding to do. From the narrative perspective, this thing, the picture behind me, I made, it's art. It's actually fiat currencies from all around the world, real currency. It's hundreds of dollars in this thing that I threw paint all over. It's the death of fiat currency. I loved the idea that Bitcoin was coming
Oh, yeah,
for
nice.
the traditional systems. It was an anarchist thing. It was cypherpunks. It was FU money to the government. That's not what it is now. Now it hangs out with the government. It's with Trump. It's with the Clarity Act. It's with institutions. BlackRock's got it. It's not the same Bitcoin. That's not to say that it's not great, and what it is and what it's going to become is great. But I like to think about it as a teenager. Bitcoin's what, like between 16 and 20 years old, right at the age where you're kind of figuring out who the hell you are. You don't want to listen to your parents anymore. You're hanging with a new crowd. Your personality's changing and turning into what it's going to ultimately be, but it ain't there yet. And what you were isn't really that anymore either. Does
Yeah.
that not fit Bitcoin like perfectly? It is. It is a life form of its own that is going through its life cycle, and it is having growing pains. It is. It is going to have its first time where I don't know, maybe it gets addicted to drugs. It goes off into
Yeah.
rehab. It breaks up with its girlfriend. It loses its job. Like those are the things that people go through. Bitcoin's got something, and other narrative things like we talked the gold. It didn't do the digital gold thing it was supposed to. There's going to be people out here who say maybe it's not digital gold right now. And maybe it will be. It's got the characteristics, but maybe it's not right now. Quantum. So there's just
Yeah.
enough things out there. Even if quantum's nothing, it doesn't have to be. If you actually look at the chart and you take Google's tweet about them making a breakthrough in quantum and pop it on TradingView, it'll come up. It's that exact top to the day of Bitcoin. Promise you that that's true.
Yeah.
And so somewhere, something that happened and the market took that as,
Yep.
Bitcoin stopped. And it
80
has been since. So I
right.
don't know. I mean, I can't ignore something like that. So I got enough narratives, I got enough technicals, I got my cycles, I got my macroeconomics, I got my stock market AI bubble looking like it's going to pop. I have commodities secular change.
It's
Just too much.
it's interesting that you brought that up. I believe that the 82.5 monthly close open, when we spiked that to the 82.8 level, I believe that was right around when they mentioned like the math is already set. That what we're waiting for and what you need to pay attention to is the tech hasn't caught up with the math yet,
Mhm.
right? And I believe that was right around 82.8, right? That was right there, nearly to the day, when we had the first big breakthrough on some of the quantum stuff that was in and around the 123 to $125,000 area. We saw the big $10,000 step in from a large player that did the spot sell that kicked off all of the all of the liquidations on centralized exchanges, kicked everybody in the gonads, in traditional markets that were buying calls at the highs there, and absolutely got destroyed on that side of the market. Because in on the theory side and on the fundamentals side, we're in a tale of two markets, but they're intrinsically linked, right? Bitcoin obviously linking the two of them, but we have crypto native exchanges on one side, and then we have the spot ETF cohort on the other. DATs, they're going to go boom and bust, whatever that ends up looking like. no one can really predict who is going to stick around. Yes, I know people have strong opinions about MicroStrategy or strategy, but they're net buyers still, even when they're distributing, right? So they're not an actively trading cohort, right? You have APs APs for the large institutional players that are managing the creation and redemption units. So that's active, right? That's active buying and selling of Bitcoin. And then you have all of the leverage that's built on top of that through the open interest in those markets and all the options contracts. You then have the crypto native side of things, which is all your exchanges, all the open interest on those exchanges, and then all of the OTC and all of the open interest on OTC, or the hidden open interest through loans through OTC desks for cryptocurrencies. So, we often get well, it's the institutions. It's because of the institutions that it's doing this. And it's like, well, nobody could have told you coming out of the bear market into the bull market and shifting structure, that it was a guarantee that institutional players were going to get those spot ETFs approved. But we already kind of knew where some of the major upside targets were going to be and where to likely look for tops all the way through. Like,
Yep.
it's not, you didn't need to know what they were gonna do to really be on your game for some of the way that things were occurring. And this is where people get the disconnect with technical analysis. I often hear the "no one can tell you, no one knows." You're right, no one knows. But if you don't have the areas of interest and the conditions that need to be met to get there, then you will not be prepared, right? Also, the same people that say that no one knows also call the low every low.
Right. Oh my God.
That's
Oh,
always fun to me. Look, man, you are one of the most impressive people out here doing this. And I truly mean that, right? I've been in markets for a very, very long time. I have trained desk guys, market makers. I've been in management. I've gone through, and I often say this to a lot of you guys that do this. People who are passionate about this and are auto dictats and go and study this, dig in so much deeper than half the professionals do, and actually put together a much better thesis on where things are going. And it always has amazed me since I retired, how correct, when somebody actually, because there's a lot of bullshit artists out there,
oh yeah.
and it's easy to tell who's bullshitting and who's not, right? Like, and especially for you, I, and others that we associate with, it's really easy to tell the bullshit artists. But um, the macroeconomists always getting it wrong. You've got even large institutional investors getting it wrong because they're not sitting here analyzing that stuff. And there is a research analyst usually like screaming at the top of their lungs when they see their guy on TV saying crazy shit, right? They're like, "Oh no, that's not what we're talking about internally. Why are you doing?" Well, they're trying to shape a narrative, right? Um, but when it comes to Bitcoin in particular, there's obviously a few events that are happening, including today into tomorrow. We have BIP 110. So I don't know if you know this or if I've talked about this when you were on stage or not, but I'm very heavily invested in the mining sector, not publicly traded miners, off grid. So I have a very large stake in the industry directly in Bitcoin's network. And we, of course, have the BIP 110 mandatory signaling going live and very shortly here tonight into tomorrow for me here on the West Coast. And we're looking at, it's a pretty significant event in terms of narrative.
Mhm.
I'm going to tell you all right now, it's not very significant in terms of the network itself because no signaling is really happening up to this point, and we are literally right near the mandatory signaling portion. So, but there's going to be a pretty fervent narrative there. Of course, we have clarity as a narrative,
Yep.
and it not passing. And of course, it's indicated that there's likely no movement on that, we saw XLM, XRP all take a leg down, while Bitcoin just kind of hangs out, kind of goes sideways and up. And we are right in the thick of it. You have so many chart after chart after chart after chart with the timing, and August is when I have been talking about we should see the move start to begin soon, probably back half of August, early September timeframe. I'm assuming you're looking around that time frame as well, into, the Q4 time period.
Absolutely.
Now, I am curious to hear your thoughts on this. If we do not initiate the larger portion of the move by, let's say, October, November timeframe, and we start bleeding out into longer term timeframe looks, uh, does that change your thesis, or would that change your thesis on
It
what's
would,
happening?
yes. Yeah, I'm very strict, especially when it comes to the cycles. If I don't see anything, I think I might give it through the end of December. If we don't get that significant bottom that says this is a bottom, capitulation, high volume, terrible things, suicide hotlines posted on Reddit, that's a bottom. Till
Mhm.
if I don't get that by December, I have to say to myself, something is off here. My cyclical low did not come in at all where I thought, because August, or what was July, did we make the low, recent
Yeah.
low? That's too soon. I really can only allow like 10% left or right translation from October, mid-October-ish. So I can go into November, I can come into September a little bit, but I really can't go too much further past, say, like December. It's way past 10%, and something will be off in my analysis. And I am so the type, as soon if I recognize anything at all is even like throwing my spidey sense off, and like I'm like, hey, I don't know, something seems there. I will start to adjust. I mean, look, I'll be the first to come out and I'll throw all of this away the second I feel like it's not it anymore.
Yeah.
But it's not, that hasn't happened yet. So I keep this as my preparation and my plan, but then I take it day by day, level by level. I'm bullish right now, and I know that's difficult for my audience, most crypto people out there who aren't like in the weeds like us, to truly understand that you can hold multiple theses. I am so bullish near term, but I am bearish mid to long term, and
Yep.
for all different reasons and at different time frames and stuff. So yeah, it's a very complex machine out there, the financial market, with so many moving parts and so many things you can do and so many approaches and so many people and so many personalities and so many methods, that no single person or thing or tool is ever going to be right. There's no one has a 100% track record. Even I've been very accurate. If I've been accurate, I'm probably due for a loss. So who knows? Maybe I'm wrong with
Same.
this sort of stuff. So
Same, brother.
yeah,
I've been
right,
thinking
right.
about that.
Probabilities wise, I'm due. I'm due.
I have to say this, Tony, because I haven't said it in a while, but you get that creeping feeling when you have been nailing it over and over and over and over again. And then it's like, wait. This isn't, we're getting close. Something's got to
I know
give
it's
here.
coming.
Yeah. So, and honestly, I myself, I do pride myself on my track record for having a pretty balanced look at the markets
Mhm.
and what it is that I'm looking for. I do value accuracy, my accuracy. And that's one of the reasons why I think we have such great conversations, you and I, and then everybody that's on the Wolf stage when you're there. And obviously when you're not there, there's other guests that come on to Cage Show that really do a really good job. And one of the reasons why is because we respect the accuracy while having very different ways of getting there, right?
Mhm.
Very different methodologies that are all kind of confluent with one another. Obviously, detractors are like, well, if everybody's looking and seeing the same thing, then obviously they're wrong. No, we've been right, and that's the point. Um, and I'm not above shoving it in a few people's faces, by the way, because it can get a little annoying when folks continuously question a very accurate track record. But at some point, I will be wrong and I will get harpooned for it. And I'm willing to take that, because if you're right for too long, there's something wrong, right?
Mhm.
There is something wrong. And it can be because I'll tell you, Tony, even in some of the swing trades that I've been taking, I'm like, this shouldn't work, but it did. Like I have to get taken out of one of these positions sooner or later. Like I can't have just banger at trade after banger trade after banger trade. It's not normal.
No.
And one of the weird things is I say that now, and then say that now, and it's probably going to take me out of one of these trades. So
Yeah.
I'm kind
That's
of
always
hoping
the way.
for it. You got to stat. You got to have the L's. Nobody's perfect. Nobody's 100%. You can't beat 100%, but you sure can talk to brilliant individuals like Tony. And you can find him on X. You can find him on Slice. And Tony, I really appreciate you joining me today. And we got to do this again, man. We got to do this again.
Definitely. Thank you so much. Always such a pleasure, Landy. I mean, truly some of the best conversations I've ever had in this space. So anytime you want me here, I'm happy to.
Hell yeah, man. Well, I appreciate that. I know the audience does too. I was getting messages like, "Hey, I can't make it the live stream." It's like, don't worry. It's recorded. So yeah, and we've had quite a few people that we know come through and say hello in the chat here. I apologize, guys. I know that I usually chat with you, but we're deep in conversation. We are nerding out. Like we got to do it, right? They got to when you this is just as much for you guys. This was for me. I told Tony this. It's like this is kind of the Fridays and bringing guests on. I'm such a nerd with this stuff, and I have such respect for a lot of these folks, and especially Tony and others that you see here. That I'm in my element. We could literally talk until we're blue in the face till next week sometime, and we would never end. But we do have families. We do have to go eat food and do all the regular stuff, take the dogs for walks and all that kind of stuff. So, Tony, thank you so much. Please make sure you go find him. He puts out some really good stuff on Slice as well. Make sure that you're going and checking out his stuff over there. I think you might have recommended that they contact me or something because they got in my DMs recently as well. So
Yeah, great
so
people. Check them out. I'll let Thomas know to take good care of you.
yeah, well, there might be some opportunity there. I did talk to somebody behind the scenes there. Most of my stuff, obviously, this is all brought to you by David Gockstein and the Gockstein Network. And then, of course, Tony's here representing himself. He's out here putting his stuff out on the timeline. He's doing stuff that is, on the Slice app as well, and it's really good to see. So we're probably going to talk again on Wolf Bitcoin soon, right?
Absolutely, my friend. Every
Awesome.
Tuesday at 11, I'm there.
Excellent. So you all know where to find us. You know where to find Tony. Hit the main post. You can see his profile there. Make sure you're following him. Make sure you're following. Well, I mean, if you're watching me and you're not following me, what the hell are you doing? And then obviously you can catch us next week on Wolf Bitcoin. You'll find me on David's show, The Breakdown, for my segment at 12 p.m. Eastern Standard Time, 9 a.m. Pacific. And then I will have my Monday market analysis or market update out at 9 p.m. Eastern next Monday. So please like and share all of this out there for the people who like to do replay gang. Tony, thank you yet again. And we are out. Have a great weekend.
Thanks, everyone. Thanks, Landy.
Appreciate you, brother.
Dude, just so awesome.